All right, well, Yahoo Finance's Julia Roche sat down with Monica Erickson, DoubleLine Capital's head of investment-grade corporate investing, to discuss the state of the credit market. Let's take a look at what they had to say.
Yeah, well, I think what's changed, well, I think when we met, the Fed had just pivoted, and that has really been the big change in what's going on in credit and why credit has been performing so well since January 4th. One of the areas that we have been talking about is the triple B space, and I'd like to get more into the weeds and to the credits that are in the triple B space and have a discussion.
Yeah, let's dig in on triple Bs, because there is sometimes this narrative out there that they're treated the same, but you don't view it that way. How are you viewing triple Bs differently from the rest of the market?
Yeah, well, I think it's important to look at why companies have decided to lever up to be what we call triple Bs, which is the lower end of the investment grade market. I mean, they still are investment grade companies. A lot of them are large, with market caps of over 200 billion, but they have just chosen to move down the credit spectrum because financing has been so cheap. Moody's just did a report to look to see how these credits got into the triple B space, and it looks like about a third of them have chosen to be there. So they were originally, say, single A, double A companies that have done either acquisitions, share buybacks, dividends, and because financing has been so cheap, it makes sense for them to migrate down the credit spectrum there. About a third of them have been triple B forever, and their business models are such that it makes sense for them to remain triple B. And then a third of them are actually high yield companies that have been migrating up because we have been in this economic expansion for some time. So I think to group the triple Bs as one and all of the same is an incorrect way to look at the market. And the way that we're looking at it is we're trying to find credits within that space that we think will outperform.
Then what's the big risk here for you? What is the one thing that you are focused on that's on your radar?
It really is kind of macro policy, Fed policy. I think that is what shifted the market in January, and right now the Fed seems to be very accommodative. But Powell has been known to go back and forth with his policy and his discussions on where the Fed is going. So if I think the Fed remains accommodative, we can continue muddling along, and you could see spreads go even tighter from here. But I think a lot of it rests on the Fed.